Good morning, everyone. Today, we're diving deep into NVIDIA's architectural dominance in the AI era, understanding how it forms the very substrate of intelligence and, crucially, how this underpins the success of the broader big tech landscape. NVIDIA isn't just a component vendor anymore, it's the economic bedrock. With a staggering 70 to 95% market share in advanced AI chips and a contracted backlog approaching $1.7 trillion, NVIDIA is the fundamental layer upon which global GDP, foundation models, and cloud hyperscalers are built. Their CUDA software layer and network fabric create an integrated ecosystem, making them indispensable. This foundational role means that as NVIDIA thrives, so too does every big tech company that relies on or builds upon this infrastructure, making the entire sector a compelling investment. NVIDIA's strength lies in its transition to what we can call an AI operating system, a full-stack integration across silicon, networking, and software. In silicon, their extreme co-design, like the NVFP4 Precision, delivers 10x-30x performance leaps beyond Moore's law, with an annual release rhythm that outpaces custom silicon cycles. This means big tech companies get cutting-edge hardware consistently. For networking, technologies like NVLink and InfiniBand provide immense bandwidth, shifting the bottleneck from the chip to the rack, a problem NVIDIA also addresses. And then there's CUDA, their irreplaceable software moat. With over 20 years of optimization and millions of developers, it creates incredibly high switching costs. Despite the rise of hyperscaler ASICs, this full-stack integration ensures the NVIDIA standard prevails, providing a stable, high-performance platform for all big tech AI ambitions. Let's examine the fascinating CapEx supercycle and circular capital flows. This slide illustrates a powerful flywheel effect where NVIDIA acts as both a supplier and a financier. Big tech companies like the Magnificent Seven are seeing their combined CapEx increase by over 70% year over year. A significant portion of this investment goes into cloud consumption, directly fueling NVIDIA's revenue. They capture 40 to 60% of this spend. In turn, NVIDIA uses its substantial reserves, over $60 billion, for venture investments in startups like CoreWeave and OpenAI, which then buy more cloud capacity, completing the cycle. This means NVIDIA is effectively the financial guarantor of the AI infrastructure build-out. Their robust revenue and strategic investments ensure the entire big tech ecosystem has the necessary foundation to grow, making an investment in big tech ETFs a direct participation in this powerful, self-reinforcing cycle. The economics of NVIDIA's Blackwell architecture beautifully illustrate why big tech relies on them. Blackwell offers a projected 30x performance scale over its predecessor, Hopper, primarily through advancements like NVFP4 Precision. This translates directly into phenomenal ROI for big tech. A $5 million investment in a Blackwell system can generate $75 million in token revenue, a 15x return. This massive efficiency gain drastically drives down the cost of manufacturing intelligence. For cloud hyperscalers and other big tech companies, this means they can deliver more powerful AI services at a lower cost, protecting their margins even as model complexity explodes. NVIDIA's innovations directly enable big tech to scale their AI offerings profitably, making their products more competitive and their businesses stronger. In the era of trillion-parameter models, the network truly is the computer, and this is where NVIDIA's architecture shines, directly benefiting big tech. The GB200 NVL72, for instance, boasts an incredible 260 terabytes per second of bandwidth, 14 times faster than PCIe Gen 6, and delivers 1.4 exaflops of compute power. It treats 72 GPUs as one unified unit through NVLink. Why does this matter more than individual chips? Because with massive AI models, the bottleneck isn't the raw compute power of a single chip, it's the movement of data between them. Competitors can build chips, but duplicating NVIDIA's interconnect maturity is the primary barrier to entry. This advanced networking infrastructure allows big tech companies to scale their massive AI models efficiently, ensuring they can deliver groundbreaking services without being hampered by data transfer limitations, solidifying their market leadership. CUDA is NVIDIA's irreplaceable software layer, a critical element that fuels the innovation across big tech. It acts as the bridge between enterprise applications like PyTorch, TensorFlow, and Pandas, and NVIDIA's powerful hardware, through a rich ecosystem of CUDA and CUDA-X libraries. A compelling case study is Snowflake. By integrating CUDA-X, they achieved a 200x speedup in machine learning workflows with zero code changes. This is incredibly significant for big tech companies. It means NVIDIA embeds itself deep into the enterprise data layer, locking in business logic, not just model training. For big tech offering cloud services or building their own AI products, CUDA dramatically accelerates development, improves performance, and reduces time to market, making their AI services more attractive and efficient for their customers. This slide highlights the fascinating symbiosis between NVIDIA and its partners, who are also, in some ways, rivals. The hyperscaler paradox. Companies like Google, AWS, and Microsoft both purchase massive NVIDIA H100 and Blackwell clusters, while simultaneously developing their own custom silicon like TPUs, Trainium, or Maya. Yet, despite their internal efforts, they must offer NVIDIA's platform to capture the broad developer market. Microsoft, for example, relies heavily on NVIDIA for OpenAI. The strategic trap is clear: hyperscalers build ASICs for internal cost reduction, but they cannot afford to lose the vast developer ecosystem and advanced capabilities that NVIDIA provides. This dynamic ensures that even as big tech companies compete, they continue to drive demand for NVIDIA's foundational technology, creating a rising tide that lifts all boats within the big tech ETF. The case for standardization, driven by NVIDIA, explains why ASICs often lag and why big tech companies continue to choose NVIDIA. NVIDIA operates on an annual rhythm of innovation, delivering new architectures like Hopper, Blackwell, and Rubin year after year, providing instant access to open-source innovation, a unified software stack, and high portability. In contrast, custom ASIC development cycles are much longer, often spanning multiple years from design to deployment, and come with risks like fragmented software support and vendor lock-in. NVIDIA offers portability premium, essentially, insurance against algorithmic shifts. For big tech, this means they can rapidly integrate the latest AI advancements without their custom silicon being optimized for yesterday's models. This continuous innovation and standardization from NVIDIA are crucial for big tech to maintain their competitive edge. Let's look at a cautionary tale: the Tesla pivot. Tesla, known for its vertical integration, attempted to develop its own custom D1 chip for Project Dojo, aiming for independence in its AI infrastructure. However, by August 2025, this project was deprioritized, effectively a dead end. The reality was that Tesla simply couldn't match NVIDIA's pace of innovation and the breadth of its software ecosystem. The outcome? Tesla pivoted back to NVIDIA, purchasing between 50,000 and 100,000 H100 GPUs for its Cortex supercluster. This serves as a powerful proof point: even the most vertically integrated tech giant capitulated to the NVIDIA standard due to its unmatched software ecosystem, performance velocity, and sheer innovation. This underscores NVIDIA's foundational role and why big tech companies ultimately rely on its ecosystem for cutting-edge AI development. The evolution of workload from training to inference is critical, and NVIDIA is leading the way, directly benefiting big tech's operational efficiency. With NVIDIA Dynamo and Grove, they're optimizing the software layer for disaggregated serving, breaking down tasks into compute-heavy prefill clusters and memory-heavy decode clusters. A powerful example is the Baston case study, which saw a 1.6x throughput increase with zero new hardware, purely from software optimization. This focus on inference optimization is crucial for big tech, as the majority of AI compute cycles will eventually shift from training models to running them in production. By making inference more efficient, NVIDIA allows big tech companies to deploy AI services at scale, reduce operational costs, and deliver faster, more responsive AI to their users, thereby enhancing profitability and market reach. We're seeing a significant shift toward agentic AI and the rise of reasoning models. While standard large language models represent fast thinking, simply generating output, next-generation reasoning models, such as DeepSeek R1, engage in slow thinking, with multiple reasoning paths and thoughts. This fundamentally changes the computational demands, leading to an inference time compute explosion. NVIDIA is at the forefront of addressing this, with optimized architectures like Blackwell Ultra specifically designed for these exponential inference compute needs. This means NVIDIA is not just supporting today's AI but building the critical infrastructure for the next generation of AI. For big tech, this ensures they have the foundational technology to develop more sophisticated, intelligent, and agentic AI systems, securing their position at the cutting edge of innovation. NVIDIA's influence extends into diverse verticals, including sovereign clouds and enterprise solutions, further diversifying their revenue base and solidifying their market position. Nations are building domestic infrastructure for compute sovereignty to protect culture and data, with NVIDIA's technology forming the backbone. Simultaneously, beyond the Mag 7, Fortune 500 companies are deeply integrating AI into their workflows, using platforms like ServiceNow, or creating generation farms with Adobe, all powered by NVIDIA. This diversification means NVIDIA's foundational technology is enabling AI adoption across a much wider economic spectrum. This creates a rising tide for all big tech companies providing enterprise AI solutions and cloud services, as the demand for AI infrastructure expands globally, reducing reliance on just a few major players and opening new markets for growth. Looking to the next frontier, NVIDIA is laying the groundwork for physical AI and robotics. Their Omniverse platform acts as a high-fidelity training ground for AI, while Project Groot and Jetson Thor bring AI into physical reality. This represents nothing less than the industrial revolution of AI, where virtual brains meet physical bodies. NVIDIA is preparing the infrastructure for a billion robot future, encompassing autonomous vehicles, heavy industry, and beyond. For big tech, this opens up vast new markets and opportunities. Companies like Amazon, Google, and Microsoft, with their interests in robotics, autonomous systems, and industrial IoT, will heavily rely on NVIDIA's foundational work to build and deploy these next-generation AI applications. Investing in big tech ETFs provides exposure to these transformative future industries that NVIDIA is enabling. While NVIDIA's strategic moat is formidable, it's important to acknowledge potential risks, headwinds, and strategic threats that could impact not just NVIDIA, but the entire big tech ecosystem. Efficiency shocks, like the DeepSeek R1 effect, question if more can be done with less compute. Regulation, including antitrust scrutiny and protectionism via compute sovereignty, could create friction. Geopolitical tensions, particularly regarding TSMC's dependency and Taiwan as a single point of failure, pose significant supply chain risks. Lastly, energy constraints, with gigawatt-scale power requirements for AI, are a growing concern. However, NVIDIA's robust market position and continuous innovation are precisely what helps big tech navigate these challenges. Their leadership in efficiency, diversified market reach, and strategic partnerships help mitigate these risks for the entire sector, making big tech ETFs a more resilient investment. Ultimately, we are witnessing the return on intelligence, driven by the Jevons paradox. As the cost of intelligence per token drops, the total volume of consumption explodes. NVIDIA stands squarely at the intersection of this phenomenon. From global GDP to agentic AI, sovereign clouds, and robotics, the NVIDIA platform is the indispensable substrate. It has transitioned from a mere hardware component to the economic bedrock of our future. NVIDIA is the inevitable toll booth on the road to artificial general intelligence. This means that as AI pervades every aspect of our economy and society, NVIDIA's foundational technology will continue to be critical. Therefore, investing in big tech ETFs provides diversified exposure to this profound and interconnected growth, leveraging NVIDIA's foundational role to elevate the entire tech stack and deliver strong returns.